this is the banana zone. Why it's called the banana zone is because the chart A looks like a banana and B, everything goes bananas. And that comes after the halving, after this consolidation, it does this. Will it be identical? Is 300 grand the price target? Whatever. I don't know, but it will go bananas. I do an enormous amount of work. There's literally thousands of pages of research from Julian Bittel and myself on this. So this is not just some flippant comments. We'd see liquidity rising going forwards. There's sources of liquidity everywhere, but the cowbell is coming. Listen out for it. It's already started. So the banana zone is all cowbell and markets going parabolic.
Real Vision founder and CEO Raoul Pal eagerly anticipates what he calls the banana zone, a phase in every crypto bull market where prices go wild and parabolic. According to Pal, this highly anticipated phase might be just weeks away. When it begins, he predicts crypto asset prices will surge so dramatically and quickly that keeping up with the changes will be nearly impossible. Pal forecasts that the overall crypto market cap will at least quadruple before the cycle ends in 2025, rising from the current $2.2 trillion to between $10 and $15 trillion after entering the banana zone. In a recent thread on the social media platform X, Pal provided unique insights into the banana zone, changing global liquidity conditions, and the cryptocurrency market. He explained that the business cycle, comprising expansion, peak, contraction, and trough phases, is driven by the global liquidity cycle, which has shown clear patterns since the global debt reset in 2008. Pal noted that in response to the financial crisis, central banks reset their interest payments to zero, starting a new cycle of interest payments every 3 to 4 years. This macro cycle coincides with the US election cycle, which often prompts increased liquidity, and the 4-year Bitcoin halving cycle. Pal refers to this alignment as the everything code, where the business cycle repeats as liquidity rises to debase the currency to manage debt rollovers. Without this, yields would lose their anchor, leading to a debt spiral. The debasement lowers the value of fiat currency, causing asset prices to rise optically. In his full thesis and predictions for Bitcoin, Pal elaborates on how these cycles and liquidity conditions are poised to drive significant growth in the crypto market. But before we proceed, please remember to show your appreciation for this video by giving it a thumbs up, and make sure you're subscribed to the Market View for more insightful content. And turn on the notification bell so you don't miss future videos. Now, let's continue with the video speaking.
The banana zone is that period when you transition out of macro crypto spring into crypto macro summer. The banana zone is when that happens, usually after the halving. There's this consolidation period, down 20%, chopping around, usual stuff. And then it starts gathering, and then it goes crazy. So let me show you a couple of charts on this. So this is global liquidity. This is the GMI global liquidity. This was on that tweet thread. Now, it's a very colorful chart. You probably can't read it. If you're colorblind, you're totally but what it says is the yellow periods are summer. In summer, what we find is liquidity increases. This is global liquidity, not US liquidity, global liquidity. So in summer, liquidity starts increasing. Obviously 2020, because of the pandemic, it went bananas. But 2016, 2012, these were good periods for liquidity. And guess what? Crypto, technology, they all rose. Then you get into fall. Fall is often when the real fireworks happen. Liquidity keeps pumping and then eventually tops out into winter. That's when you get the corrections, the crypto down cycles. So we've got the best two parts of the cycle to come. Obviously, the best entry was at the bottom of winter. That's when I was buying Solana, Ethereum, all back then. And then I've obviously switched around. So I'm pretty much 100% Solana right now, outside of small meme stuff and other bits and pieces. Because Solana, the Solana Bitcoin cross chart, Solana ETH cross chart looks so compelling that I'm like, if my job here is to make as much money as possible, I'm just going to own the thing that I think is going to go up the most. So that was the view I had. You will have a different way, but please don't get stuck into a narrative. You're still stuck in some token from 3 cycles ago because somebody's telling you that it's going to definitely be the next big thing. It's not a big thing after 3 cycles, 2 cycles. It's not going to be the big thing. So just try and make money. I'm trying to allow you not to this up. Don't this up is the key mantra. When you've got a liquidity cycle ahead of you like this, please take advantage of it. So yellow tends to be in the summer, tends to be decent, but there's been 2 cycles where fall was bananas, total bananas. And then you had the last fall in 2021, which was less so. It's because the liquidity came earlier in 2020. So we don't know how it's going to play out, but this is how it should play out. Here's a chart from Exponential Age Asset Management, which is my fund of hedge funds. So it's an asset management firm that invests in the world's best hedge funds to capture this trend of going from $2.5 billion, where the market cap is now, to 10 trillion, where 10 to 15 trillion, where it is this cycle, and then to 100 trillion, where I think it goes by, let's say 2032, 2034, something like that. This is going to be the biggest, largest, fastest accumulation of wealth in all human history. And that's why I keep saying don't this up. That's why I have a long-term time horizon. That's why I don't trade around this. Just let it do its job. So here's when we talk about doing its job. So we look at the bottom, the highest return section and the lowest return section. So out of the 3 years, crypto spring, macro spring, summer and fall, crypto is the best performing asset in the world. In the next year, in fall, it's the worst performing asset. Okay, so that's what you get. But when you look at the accumulative returns, NASDAQ since 2011 has done 769%. That's amazing, 17% a year. Well, Bitcoin's done 20 million percent at 139% annualized. Ethereum, 324% at 146% annualized. And Solana, which is a shorter history, 8,300% at 203% annualized.
Raoul Pal is highly confident in his thesis because the established cycle has not failed in 3 instances. The macroeconomic cycle has been on an upward trend for even longer, and one can reliably expect central banks to continue printing more money, thereby debasing the dollar and other fiat currencies. In his Twitter thread, Pal notes that the transition to macro summer is relatively predictable due to this repeating cycle, which he refers to as the everything code. This cycle ushers in liquidity growth, leading to the creation of the BananaZone. The odds of significant changes to this pattern are low, considering factors like current debt rollovers, the upcoming election, and global issues such as those involving China. While Pal does not guarantee that this cycle will mirror previous ones exactly, he believes the chances are quite high. Additionally, the introduction of BlackRock's IBIT and other spot Bitcoin ETFs could further amplify the BananaZone, potentially creating a ballistic bubble cycle. In one of his final tweets, Pal emphasizes that the everything code is the best framework for understanding these dynamics, though he cautions that there will likely be surprises along the way, including sharp corrections and extended periods of market stagnation.
This is the BananaZone. Why it's called the BananaZone is because the chart A looks like a banana and B, everything goes bananas. And that comes after the halving, after this consolidation, it does this. Will it be identical? Is 300 grand the price target? Whatever, I don't know, but it will go bananas unless something dramatic changes. I do an enormous amount of work. There's literally thousands of pages of research from Julian Bittel and myself on this. So this is not just some flippant comments. We see liquidity rising going forwards. There's sources of liquidity everywhere, from the Fed cutting rate, from the Treasury draining the general account, to the Fed cutting QT, to potentially the Treasury offering some liquidity provisions to China so they can manage the debt deflation. They're starved of dollars. Something with Japan, who also needs dollars because their currency's been collapsing. There is a lot of opportunities. The Europeans are going to cut rates. The UK are going to cut rates. There's a lot of opportunity for liquidity. The Fed may, let's say, spin up a special purpose vehicle to get rid of commercial real estate from the banks. Who knows? But the cowbell is coming. Listen out for it. It's already started. So the BananaZone is all cowbell and markets going parabolic. So hopefully that gives you some understanding of what I think lies ahead. Will it be perfect? No. Does it chop around here for another month or two? Could do. Does it finish? If I look at the previous cycles, two of them ended in the 3rd week of May, the consolidation, and then went, and the other one was July. 2020, but 2020 was weird because we had the pandemic in the middle. It's kind of a screwy cycle. So, I don't know, it's close. They all look like they're making perfect wedge patterns, all of that. Everything else seems good. What's also great about macro summer and fall is that you can basically take any asset that's going to go up. So all commodities, those of you who love commodities, copper's done well, it'll go up. Gold will go up. Oil eventually will do. Doesn't feel great right now. Oil stocks will, mining stocks will, all cyclical plays will. Tech stocks, semiconductors, they all do phenomenally well. Crypto does. So you can be the moron, which is a nice way to be in markets. Nobody wants to try and overthink stuff. And pretty much anything you buy will go up. But some things will go up more than others. That's how I look at the world. Everything correlated. Everything. The everything code cycle of the 4-year debt refi cycle means that everything gets correlated. A few assets lead, crypto and tech. Others follow the business cycle. The business cycle's bottoming, so they all bottom. But they're all correlated. Everything's correlated. So for me, I like to keep everything really moronically simple. If everything's correlated, then there is no such thing as diversification. It is really important to me, when I set up this whole thing for Real Vision, to guide people through this massive transition. This transition into a new system, where the old system is broken. We're forced to speculate. The system is rigged against us. Asset prices keep going up, wages don't go up. Everybody's polarized, everybody hates each other. You throw in immigration, global trade, you throw in aging populations, you throw in AI, robotics, right? This is not easy for anybody. Everybody just feels like it's out of their control. And I get it, but you've been given the gift. Crypto is the gift. And all you have to do is not fuck this up.
The BananaZone refers to a period in the crypto market where prices go parabolic, named because the chart resembles a banana and market behavior becomes erratic. This phase typically follows the Bitcoin halving and a consolidation period. Raoul Pal, after extensive research, predicts this will happen soon due to rising liquidity from various global sources, including central banks cutting rates and providing liquidity provisions. Although not perfect, past cycles suggest this phase will lead to significant price increases across multiple asset classes, especially crypto. Pal advises leveraging this period for potential gains and emphasizes that the interconnected nature of global markets makes diversification less effective. He highlights the current economic transition as a unique opportunity for substantial wealth accumulation,